Hey, it's John with Vision Advisors. Thank you for taking time out of your schedule. Whether you're having an opportunity to watch this during the day or you're actually catching this in the evening, one of the things we like about our webinars on demand is it gives you the opportunity to learn when it's convenient for you. 24/7, it's available on our website, visionadvisorsinc.com. It's one of the ways that we're constantly working to add value to you and to have an opportunity to be able to elevate your level of knowledge about not only products, but also some innovative ways that you can use the product solutions that we bring to the table to help you solve your client problems. You know, one of the areas that we've talked about extensively here at Vision Advisors, but it's an area that for many producers is often either overlooked or ignored, is the fact that life insurance today, really for the first time in history, is truly life insurance that you don't have to die to use. Living benefits has really become the new normal in America. And when your clients and the people that have the opportunity to become your clients discover that they can have living benefits from their life insurance policy, they get really excited. But an area that they don't know is that they can also use life insurance as a way to create lifetime guaranteed income. Now, I'm not talking policy loans, and I'm not talking the old school way of doing life insurance where you're borrowing money and hope you don't run out of cash value. I'm talking about a guaranteed lifetime income plan that is tax favored out of a life insurance contract. We're going to take some time to talk about that today with our very special guest, Mr. Mike Zimmeretti from National Life Group. Big Mike's been a big friend of Vision for a long time, and this is a solution that I hope you are going to pay attention to in 2020 because this is the solution your clients are asking for. The opportunity to put money away and do away with the little bitty tax deduction they may get in qualified dollars to pay a big tax bill when they take it out. What about the opportunity to forego the tax deduction on the front end, create an opportunity to fund a very attractive means of growing wealth, and have the opportunity to get tax favored income on the back end? What could be better than that? It's having your cake and eating it too. Big Mike, I'm going to pitch it over to you, and hopefully I've teed you up for what I think is going to be a very exciting and informative and eye-opening experience for our producers.
Well, thank you so much, John. Always a pleasure to be with our cherished partnership with Vision Advisors. And I think you did such a good job. I may not even have to say anything because you nailed it. The lifetime income benefit rider. And as we discussed in our previous series and discussions of living benefits and understanding the concept of life insurance you don't have to die to use, particularly focusing on accelerated benefits, I think this is really the biggest distinguishing point and differentiator in the IUL industry today. It's just a diamond in the rough, and our attempt today to give you an overview of the lifetime income benefit rider, which we pioneered several years ago. We're the only company several years ago to have the income rider providing tax-free income guaranteed for life on an IUL chassis. A couple of other companies have copied us, which is, I guess, a compliment. Anytime someone copies what you're doing, you must be doing something right. But I'm surprised that the industry really hasn't jumped on this as a whole because we saw the power of income riders with annuities and playing to the fear of every client living too long and outliving their income. Growing old in America isn't what it used to be. And in many ways, that's a good thing, right? People are not only living longer, but they are better educated, resulting in better health. Higher incomes lead to a higher standard of life and expectations of higher standard living in retirement. The flip side of the coin is, as Americans continue to live longer, a new challenge presents itself. How do I make sure my retirement income will last? It's the biggest fear out there next to actually dying. And we're going to examine that today. So kind of setting the stage, we previously talked about the financial puzzle. And it's pretty simple. And this is an efficient puzzle right here. Life insurance covers the basic dying too soon fear. We talked about in a previous series becoming ill and solving that dilemma with accelerated benefit riders, because becoming ill, and think about this, very few people just keel over and die. The majority, unfortunately, are looking over their shoulder, wondering what's coming their way and how they're going to pay for it as they battle cancer, heart disease, neurological issues. We could go on and on. But these are medical expenses that just aren't covered, and there's just a whole new WebEx on dealing with ill, which is the biggest bankrupter of retirement savings in America today. But today, we're going to talk about, what if my retirement assets run out? We're going to deal with living too long. So let's demystify the lifetime income benefit rider. Now, lifetime lifetime income benefit rider acronym, that's a mouthful, isn't it? So I'm going to make it easy for you as a coach, which I'd rather come across as a coach than a regional vice president or wholesaler. And I think the distinguishing factor of this lifetime income benefit rider is, think of Liberate. Liberate your client from the fear of living too long and outliving their money, obviously, but liberate them from paying unnecessary taxes. Who knows what tax rates will be 10, 15, 20, 30 years down the road? And it's not what you earn, it's what you keep, isn't it? So we're going to deal with that, and then liberate your client. And this is huge. This is a huge coaching point that I really wanted to get across to you in this session. Liberate them from the fear of, what if the policy doesn't perform as illustrated? It's a big deal. What if it lapses? What if I get a letter from the insurance carrier saying, stop taking your income, and you might want to think of starting to make premium payments again because your policy is going to lapse? And what happens if it lapses? A lot of clients, and unfortunately a lot of agents, don't realize that the big deal is the IRS can come back and retroactively tax your client on all the previous tax-free income. It's life insurance Armageddon. So it's a huge topic to talk about in tax-free income. So let's examine how the liberates your clients from these issues and these fears. Well, in retirement, we want guarantees. Well, the death benefit speaks for itself. Premature death, there's a tax-free death benefit. We've talked about taxes. We have no idea. With different administrations vying for power, we don't know what philosophy is going to set in during our client's retirement as to where the tax structure will be. And then market volatility, well, that's always a fear, and we know with the IUL, we've got the downside protected. This slide is, if I stopped here, it just says it all. The lifetime income benefit rider, LIBOR, guarantees that your clients will have a tax-free death benefit, guarantee income to last as long as you live, guarantee to keep the policy in force. I love this one here too, is no annual loan paperwork. Who wants to fill out paperwork every year when you're retired? I'm going to retire, and I'm going to play a lot of golf, and I'm going to travel. And I don't want that phone call of, hey, can you stop and fill out all this paperwork? We got to get it into the company so we get you your income for next year. One set of paperwork, set it, forget it. No worries over loans lapsing your policy. No worry to ever make another premium payment once you set this, and just go ahead and experience life. It's a tremendous, tremendous benefit. So the lifetime income benefit rider, what is it? It's a fixed net cost loan paired with interest credits from year to year to produce a tax-free income benefit guaranteed for life. Who would this be targeted for? People that are looking for both death benefit protection and living benefits, as well as cash accumulation. This lifetime income benefit rider is available on our two marquee IULs, Flex Life and Peak Life. Really, from 30,000 feet looking down, how does this work? Well, you have a death benefit and you accumulate cash, and then at some point in retirement, starting at 60, between 60 and 85, you can turn this rider on. And when you elect it, you'll get this tax-free income every year, and as it progresses, you'll see the death benefit and the cash value will slowly come down to a point where we stop it at $15,000 worth of death benefit and $1,000 of cash, hence the guarantee that the policy will not lapse. We feed the policy through our general account to make sure that you have a protection from lapsation. and you've got a nice death benefit of $15,000 for final expense. So this is really the overview of how it works. And this works best when the policy is fully funded. If you have a client that is going to be minimally funding, or barely getting to target, you may not get the value you're looking for, but this is something that you could play with when you were looking at illustrations and case design. And having said that, this is a little off-the-cuff coaching tip that I want to really parlay to you is, why is this rider, other than the obvious, phenomenal from a consumer-centric point of view? We don't know, once the policy is issued, what the client's life expectations or expectancy is. And 10, 15, 20 years down the road, that's a lot of time in between health changes and what the client really needs for income. Two scenarios may present themselves. A client may be facing some serious health issues and not have a robust life expectancy. Therefore, they may not turn on an income rider because, hey, I'm not the person to live to 85 or 90. I'm in very poor health, and my physician says I'm not going to make it to 80 or 85. Then you can design a different loan structure that might give you a little bit more income. The reverse, a client that's in phenomenal health, that is really concerned that, hey, I'm going to live to be 100. My mother lived to be 95. My dad lived to be 90. I may live to be 100, 105. Can we turn this thing on and we can protect me from outliving my income? Absolutely. So therefore, you can make the statement to your client, when you need income at retirement, we can sit down and custom design an income stream especially for you, and we will cover all of your fears. When can this rider be elected? They have to wait. It's a 10-year waiting period from issue to the time they can turn it on. So it's kind of like a baking period. They must be between the ages of 60 and 85. There can be no outstanding policy loans. Now, that doesn't mean you can't take a policy loan, but you must pay it back so that there are no outstanding loans on the policy. There is a rider charge of 0.65% to cash value, but it starts when you turn the rider on. So if you kind of followed what I previously said, when you sit down and custom design a program for your client, they don't have a gun to their head of, well, you know what, John, I've paid 95 or 65 basis points like I did with my annuity for an income rider. Shouldn't I use that? If I don't use it and just do withdrawals or do something else, all that was for naught. I think this is huge. It's just hugely consumer centric because the client does not have to pay for this benefit unless they actually need it. There's choice in the benefit design. We can reduce the death benefit, and we can also make it an increasing or level payment death benefit. So you truly can customize it. And this example here will show you that the correlation is really between the cash value and the life insurance death benefit. We call that the death benefit ratio. The bigger the ratio, or I'm sorry, this is an inverse situation. The tighter the relationship or ratio on the right to the death benefit, the higher the payment. So here it is here. On the left, there's no death benefit reduction. I'm going to show you what that means with some math shortly. But let's say you have a policy of $500,000 worth of death benefit and you had $200,000 of cash value. We use that correlation to crank out an income number. If we want to increase the payment to you, we might reduce the death benefit to $400,000 or $350,000 and apply the $200,000 cash value to that. Why would we allow you the benefit for that? Because you can stop the rider at any time and accelerate the living benefits if you become terminally ill, chronically ill, or critically ill or injured. So it's truly a very flexible program. Again, just point of fact, as you take income out, the death benefit and the cash value reduce down to a point where we stop the policy at $15,000 of death benefit and $1,000 of cash. Now, this is the point in the presentation where I'm not going to try to overwhelm you and dazzle you with math. That's not my forte. but some people like to know what time it is rather than tell me how the watch was built. So if you're the type that wants to know how the watch was built, or your client has that inquiring engineering mind, we certainly can show them how we do this. So kind of referencing back to square one, as we accumulate cash value, that's not guaranteed. It is subject to the ebb and flow of indexing. But once we turn and do this calculation of this benefit payment, it is guaranteed for life and can never change. Now, under the hood, there's an income-based cash surrender value number that we use. We use a base payout percentage, and boy, look at this. Max death benefit ratio versus death benefit ratio. Where do all these numbers come from? Plus an adjustment factor. Well, I can supply all these to you. They're in the body of your contract in your IUL. I can send you, or John from Vision Advisors can send you a specimen contract that'll show you all these ratios. So we certainly have it. But let's look at the math very quickly, because I want you to get the dynamic of how you can design income. So here's a case study, a person age 45, male or female, and face amount of $500,000, and they elect to have income 20 years later at age 65. Well, we do the math. The assumed accumulation value at this election is $200,000. So we got $500,000 of death benefit, $200,000 of cash value. We calculate an immediate death benefit ratio, which gives us 250%, and we plug it in to these factors that come out of the policy that it's all due to age, et cetera, and you do the math, and then you get a 5.55% number, which is almost akin to fast forwarding to a withdrawal ratio on an annuity product, where you finally take that number and multiply the accumulation or the income base. In this case, it's the accumulation. So that's a difference from the annuity products. And you can see there's $11,000 of tax-free income guaranteed for the rest of this client's life. So remember that number, 11,000. Now, I just said we can customize this. Well, simply, let's drop the $400,000 of death benefit, the $500,000, excuse me, to $400,000. By constricting that corridor, or the ratio between the cash value and the death benefit, we now have a higher percentage withdrawal times the cash value. Now we've increased it from 11,000 to 12,200 per year. So that is the math behind what we can do, but I strongly urge you to look at our illustration software that really does a phenomenal job in showing the entire living benefit package, and we'll do all these calculations and case design for you. But it's always important. I always like to say, and John always laughs, I said, who are we in the grand scheme of financial planning? Well, just like a doctor who has patients, you as an advisor are the doctor, your clients are your patients. We are the pharmaceutical reps, but at the end of the day, after we tell you how our medications work, you are the one that is writing the prescription, and you are the one that is doing the exam and looking at the overall financial picture. So this is really nice to have in your pocket and move forward. How do we keep it tax-free? Well, we take advantage of a loan structure, but we factor in the interest. We do a fixed net cost loan internally. The lifetime income benefit rider terminates actually, let's step back. Please be careful with explaining this rider as we talked about with the ABRs, because in some scenarios where a client cannot get preferred or standard and they're rated more than 250%, we withhold the rider. It's not to be mean, but the numbers just don't work out for the consumer, and it wouldn't be worth their while. So we don't want to insult their intelligence. The rider will negate if we turn on one of those ABRs, terminal critical illness or critical injury. Let's move forward on this. How does it play with other riders? We kind of examined that. After election, there is a 5-year recalculation of benefits. It's a ratchet feature. And I've examined this under the microscope, and I do believe after the 6th or 7th year of taking income, this ratchet feature really will not benefit the consumer unless the policy has really had a robust accumulation experience. So I would go easy on the gas pedal with the ratchet feature. It's nice to have it in the early years. What if we have an incredible return and economic boom and we're getting a lot of return? Yes, we'll recalculate it after the 5th year. But I think once we get into the 10th year, I don't think your chances of getting a bump in the income is possible. We guarantee no lapse. We reduce it to $15,000, $1,000 in cash. You may stop and start the income rider one time per year. Why would I do that? Well, maybe you're having income from another source. Maybe you're in a down cycle in the economy and you're not getting revenue from rental properties or from other investments in the markets, and you need income out of your policy. You can turn it back on, and we guarantee that you can pick up where you left off. Key features again, the guarantees. No policy charge until the rider is elected. No additional premium payments once elected. And I think that's a huge factor because, again, in retirement, you don't want to get that letter of this product has not performed the way it was illustrated 15, 20 years ago. You need to start from square one and start writing a check, and maybe you want to think about stopping your income. It's just not really a fun place to be as an advisor. So in the end, the story is simple. We offer protection for your beneficiaries with the death benefit. We offer the most robust living benefit package in the industry. And now you have potential for guaranteed income tax-free for life. Marrying this concept to an indexed annuity is a phenomenal sales idea because what's better than one income? Two incomes. And how about that income, that second income being tax-free guaranteed for life? So at the end of the day, it's about protecting what matters most and figuring out life's puzzles. Thanks, John, for allowing us to talk about the lifetime income benefit rider today.
You know, Mike, as you were talking, I was just thinking of a couple of articles I recently saw online. There was a MarketWatch article just a little over a week ago where, you know, I've been having this conversation with you and with others about this longevity issue and the need for sustainable income. We had a Nobel Prize-winning scientist talking to the financial services industry saying, what if your clients are unlucky enough to live to the age of 100? And he was spending time talking about the longevity issues that are making that much more likely. And the fact that today's retiree needs to be planning for a 30 or 35-year guaranteed income solution. So your clients are going to need multiple buckets of money and multiple places from which they can pull additional income as they live longer and longer in retirement. I go back to the Popular Science article that we saw back in 2018, that said, this is how we die in America. That article opened by saying, today's baby boomers, on average, are going to live 20 years longer than their grandparents. Now, my grandparents lived into their 90s. So for me, that's pushing 110. So having guaranteed income and some of that income being tax-free, what an opportunity for your clients. So here's an opportunity that if they die too soon, they've got a death benefit that's going to provide the income they would have generated during the rest of their working career. If they live too long, they now have a guaranteed income stream that they never have to worry about, not having to worry about their policy lapsing, or if they get ill along the way, they can access this death benefit through the living benefit features of the folks that created the living benefit functions of life insurance, and has really been a pioneer in this industry for a long time. This is a win-win-win across the board. And if it's not a conversation you're having with your clients, your competition is going to be having this conversation with your clients. And at the end of the day, when they see a solution like this, they're going to want to buy it from somebody. It might as well be you. So if you've got a case you're working on, give us a call here at Vision Advisors, 1-800-505-8489. Again, 1-800-505-8489, and we would welcome an opportunity to run you an illustration and to show you the power of this National Life Group IUL. Big Mike, we always appreciate you coming on. Thank you for being with us. Thank you for the relationship that we have with National Life Group. For those of you listening, we hope your 2020 is amazing. We're here to add value to you. We're here to help you see success and more of it. So give us a call and let us know how we can help you grow your practice and close more opportunity in 2020.